Hello and welcome to the Fundamental Value podcast, hosted by Joshua Frank, co-founder and CEO of The Tie. On Fundamental Value, we speak with leading analysts, traditional finance and digital asset firms, and investigate how leading minds in the cryptocurrency space research, analyze, and quantify the value of digital assets. Quick disclaimer, this podcast was recorded and is being made available solely for informational purposes.
After about 30 minutes of incredible number of tech issues, we decided that we cannot figure out how to get the mics to work. And so we apologize ahead of time if the audio quality is not as good as normal. But my guest is much better than normal. So Rob, I'm very excited to have you join the Fundamental Value podcast. Rob is general partner at Dragonfly. It's great to have you on.
Appreciate it. Thanks,
So can you kind of walk us through your background and how you discovered crypto?
Yeah. So currently, as Josh said, a general partner at Dragonfly. Prior to this, I had worked at a large hedge fund called GoldenTree Asset Management. Had helped lead crypto investing there for a while. And before that, broadly, I was worked on Wall Street. So both on the sell side and buy side. Started my career at Goldman a number of years ago, coming out of the financial crisis. It was around 2014 when I actually first got exposed to Bitcoin. And, at that time, I was spending a lot of time at Goldman thinking about financial technology more broadly, how it could serve, the underbanked, how it could serve, the emerging markets, et cetera. And, I started to hear this conversation around Bitcoin and about how it could help those types of people, right? And that got me excited and into crypto at first. Spent, a little bit of time on that, but I think I broadly struggled a little bit, and I was early and young on Wall Street and had a job which didn't allow me to think a lot about other things, but I struggled a little bit at times with the volatility, how Bitcoin was going to be, broadly adopted. And it was then when Ethereum happened in 2016, 2017 that I really started to understand some of the effects that crypto and blockchain could have on using trustless and permissionless systems to bring more power to the users and to disintermediate a lot of the inefficiencies that we had within financial services, which was really where I was focused at that time.
And so how do you think that narrative has played out over the last few years? Is there any serious disintermediation going on yet? And what do you think is closest?
Listen, there absolutely is, but there's been a lot of a lot of stuff that's not particularly good. That's had people been able to raise capital into a variety of different things, and there's been a lot of stops and starts over time. But I think broadly the ethos of trying to bring crypto and a better form of money and financial services to the underbanked and underserved is actually gradually happening. One example, one of my partners at Dragonfly has of this is he was recently in Argentina, and I think he was also in Chile for a period of time. And one of the things that's happening there is because of inflation, there are a large number of people who are basically kind of backdoor dealing U.S. dollars because they want to save in a more stable currency. And so what's actually happening is a lot of people are trying to take USDT, which is really the what runs that area, and less so USDC, but there's some swaps and what happening, and people are actually using it as a way to save relative to the local currency. And so this has long been something that crypto people have talked about, and everyone has kind of sneered at, but we actually see it happening in these countries right now.
And so, talk to me about Dragonfly. So you're at GoldenTree before, had a lot of experiences in more traditional capital markets. What really excited you about Dragonfly, and what is Dragonfly broadly?
Yeah, so I'll start with the second part, but Dragonfly more broadly, we are kind of a long-standing crypto venture capital firm. We have we're investing currently out of our third fund, which we announced back in March, of $650 million of committed capital. We have a lot of dry powder. We also have kind of a liquid long-short hedge fund as well. And what we are, I think, you can check out our website and get a little bit more feel for it. But what we've always believed in is that crypto is going to bring this evolution. and we've tried to back the best technologists and the best entrepreneurs in the space who are going to build these new forms of software, essentially blockchain is. And so that's kind of been the Dragonfly ethos more broadly. The second part was what do I do?
No, why were you excited about?
I was excited about Dragonfly. Yeah, so one, I've been investing in the space for a number of years, and I had started to have interactions with Dragonfly. I think as anyone who has to invest in the space, they're broadly, and we are broadly invested. And one of these things that I'm talking about, a payments business, primarily cross border in Africa, we had some of the executives at GoldenTree had co-invested alongside a deal that Dragonfly had led and Nasib had led. And it was through kind of that first interaction that I started to understand, kind of what they stood for, that I had a lot of overlap with how they thought about the space. And then as we got to know each other a little better, the way that they think about kind of, deep diligence, the way they think about being, entrepreneur first and led, the way they think about, we actually are, quite focused on things like governance, despite some of the recent things that have happened in crypto. That's not a place where we've had kind of the same downfalls as others, and started to understand that kind of what they brought to the table really overlapped with how I thought about the space, and was really excited to be able to join and have this opportunity with them.
And so, what is your role specifically at Dragonfly? There are a number of partners at the firm. So, what is your specific mandate that you're focused on?
Yeah, so I'm a general partner, like I said earlier. What I got brought on to do is, with my skill set, is help kind of round out some of what we might do on later stages or more like special situations that might require a kind of a more traditional Wall Street style skill set and background. But we've been so successful at the earliest stages and even a little bit later. And so what I bring to the table is lead a team who.
So to now it's mostly been pre-seed to A, is that correct?
Yeah, that's more broadly what Dragonfly has been. Yeah.
And so can you kind of talk us through the types of investments and opportunities that you're looking for specifically? So one of the things you mentioned is special situations. So I'm curious, obviously I don't think that's the core of your mandate, but it certainly sounds like it's part of it. How you think about opportunities, especially now in the market that we're sitting in as it relates to special situations, but also what your, I would say, day job is and what you're focused on, from more of an ongoing perspective.
Yeah, well, I think broadly, my day job is to partner with kind of the best founders and best teams in the space. I focus a lot on finding those great teams who are solving problems that are not easy, right? So there's been a lot of businesses or protocols that have raised capital that are simply derivatives of other things, and where I try to spend my time on who's solving the hardest problems, who's kind of at that crux of that hockey stick, and who's really got that strong focus on technology and product like we talked about, but who also understands the need for a good a good go-to-market motion, for good distribution, good sales, and who has shown some traction. I also, you talk about such situations. There are opportunities, and it's not core to what Dragonfly does or what I do, but there are opportunities with businesses who, theoretically, they're going concern, they're a good business, they're running, very well otherwise, but because of the way the market has been this year, or because they, maybe lost some money on FTX, et cetera, they need to kind of recapitalize the business. And in those types of situations, or even maybe like secondary opportunities, I spend my time on those as well.
And so, you're focused on later stage. So I think traditionally the companies in crypto that have raised at a later stage tend to be exchanges, custodians, prime brokers. Where do you think are the most exciting kind of emerging opportunities for later stage investments? So I would broadly say, categorize it starting at a B and kind of going later. Where do you think the most exciting opportunities are? And that could be on a sector level. Kind of take that as you wish.
Yeah, I think I guess I'll start by where I view there are both later stage opportunities, but then also where I view the most growth coming.
Yep.
And I think there's a lot of opportunity in this space, a lot of low-hanging fruit for technical advances that bring more users and institutions in the space, and that make it a lot easier to use. Whether it's crypto, blockchain, et cetera. Right. So things that are focused on scalability. So, for instance, Dragonfly led ZK Sync's Series C. Right. So that would be a type of scalable solution. Obviously, it's there are other reasons that we wanted to back that business, and we've been with them kind of the whole way. But scalable solution, I would say, is kind of is top of mind. I think account abstraction, which Vitalik has been talking about this more broadly for Ethereum, but then as I think about it in a more colloquial way, ways of which it's easier for consumers or businesses to utilize wallets, to utilize custody without having to go through some of the toughness that is using a typical wallet that you would for self custody. Authentication is top of mind right now. Security, both security for your assets, but also your privacy. Smart contract trading solutions. One of the things that crypto has done a really bad job of is just being able to protect against spoofing, which is
like order book spoofing.
Yeah. Right? But both on the TradFi and DeFi side, right? And so solutions like this that make it more tenable for traditional financial institutions to trade.
Is that like a Solidus Labs type product, or you're thinking something?
Yeah, so that business would do that. There are a few others as well.
I think Aventus and a few others.
Yeah, correct. Yeah, exactly. NASDAQ has a solution.
Yep.
So there's a
NASDAQ Smarts, right?
Yeah, that's right. So so there are there's those types of solutions. There's KYC AML solutions, but I think the way we focus or we approach those types of spaces are with a understanding that we believe in a future that is permissionless and trustless. And so if we do back those types of companies, we want to make sure that they want to further that cause as well, and not just make crypto like a centralized single entity. I think data more broadly. So whether it's data visualization, whether it's enhancement, indexing, but also being able to own your data, whether it's cross-chain, so data packs, social graphs, etc. Yep. That kind of builds into identity and how we track identity across different chains or across different protocols, etc. And then I think all of this usability is kind of the same thing, but better front ends and better kind of on ramps, off ramps, and interoperability. I think is another focus. That's kind of like broadly how I think about the places that are primed for kind of real growth. And it splits between kind of the application layer and the infrastructure layer. On infrastructure, I think there is more room to grow as well in terms of whether it is like exchange disaggregation. And I think we're going to see a lot of that following FTX. There needs to be tri-party agreements. There needs to be better credit structures. There needs to be just a better way, a better kind of prime broker in the space. And then I think also, kind of bringing and having the right infra to bring like real world assets on chain, I think as well.
Well, I think one of the things that's interesting on like the exchanges side is kind of just how egregious valuations got to the point where none of them, like obviously the business model of an exchange in crypto is very different than a business model of an exchange in traditional markets. Yeah. Like Coinbase does not operate like the NASDAQ. And so in that kind of vein, how do you think about building public market comps for crypto companies? Like, for example, our company, we're a data company that sells a platform and APIs. It's very easy. There's a lot of public market comps that, right? And you could see like at scale, theoretically what the multiple would be, but with like ZK Sync as an example, which is a business you talked about before, right? Leading the Series C is like, how do you actually get comfortable underwriting these deals? Obviously there's a lot of novel technology and I'm not even talking tokens, we'll get into that, but even just the infrastructure, the company, the equity business in crypto, how do you get comfortable kind of underwriting those deals? And, especially in areas where there really aren't any public comps.
Yeah, so it's a good question. And one that way I think we ask ourselves a lot. I would start off with kind of a broad concept, which is that crypto more broadly is experiencing a lot of the same cycles and issues that I experienced during the global financial crisis, and broadly Wall Street did, that we experienced during the tech boom, and we're learning a lot of the same lessons, right? And I think what's happened is we're learning those lessons, we're learning them at an accelerated pace within the industry. And so what does that tell me? That tells me that there's not enough people thinking about or being informed by what's happened in the past, and that's for a variety of different reasons. But while I do think we need to be informed by public companies, by other markets, by other cycles in other asset classes, I don't think history is necessarily going to repeat itself. And so because of that, we need to, especially when we're building this new paradigm, we need to utilize things like public comps, but not be tied to them as kind of our North Star, right? And so
as you think about the asset class as a paradigm shift, like how do you think about the TAM? Right. So I'm underwriting a deal. How do I think about the total addressable market? Because like today, the total addressable market for anything in crypto is very, very small. And so when you're going at a later stage and you're trying to underwrite growth deals, how do you take cue from the company as to what the TAM is? Do you look at what the current TAM is versus like the later? Because I think that's also part of the answer to the previous question, which is underwriting growth.
Yeah. So we certainly do want the companies to tell us what the market they think they're serving, but we don't ever just take what they tell us and build and utilize that. We trust, but we verify, right? Anything that we get. We tend to be very data driven, right? Yeah. So whether this is broad kind of macro data, whether it's off chain or on chain data, we try to make sure that we understand what is the market today, right? And so but you said it, the market today is relatively small for a lot of these protocols and for a lot of these businesses. And then to be an investor in crypto, even as we get a little bit later stage, you have to be able to imagine a world in which a lot of traditional institutions, traditional structures are either complemented or disintermediated, right? Because you have to believe that a lot of these other people are coming on chain and utilizing these applications and this infrastructure. And so what we try to do is we try to, I think, triangulate a bunch of different data points, which is, okay, well, what is it today? If it were to replace, some portion of what's happening in the traditional world, what would that look like? And then if it were to replace, what was happening in the traditional altogether, right? So let's take real world assets, for instance. Let's say all equities were going to come on chain. What would that look like, right? Obviously, that's not the case, right? And I think we can all agree that that's not the case. But we utilize a broad set of data to try to triangulate kind of probability weighted outcomes, right, in a lot of these cases. And so it's different by different protocols and different, businesses, right? So, for instance, the market for a reg tech company like you talked about before, and transaction monitoring, that business itself, it's pretty easy to figure out what that looks like, right? Yeah. Whereas in a market for a fully on-chain, or maybe even partially off-chain and on-chain, CLOB with that's doing kind of real world equities, right, is significantly higher, right? And so you have to think about these things within those contexts, but try to be quite data focused around triangulating what these can look like.
And so everyone kind of knows, broadly speaking, from the earliest stage, right? 90% of startups fail, or whatever the number is. As a later stage investor, what does your batting average need to be a very successful later stage investor?
Yeah. So it's a sliding scale, right? I think we don't ever invest in something that we don't think is going to be a fantastic investment, right? And one of the things that I think a lot about is we do shoot for venture style returns in everything that we do, right? But we try to be very specific about how we partner with certain companies. So in what I do, it's not meant to be a kind of an index. It's not meant to be a broad
the
bet.
Best per sector.
Exactly. Yeah. So we try very hard to say, this is a thesis that we're really focused on. This is what we think is going to grow. And now let me meet every company within that space and that thesis and pick the one that I know has the best team with the really that acts the quickest, and that is going to deliver the quickest, and that is going to build the best product.
And so, we talked a lot about equity businesses, but crypto also has token businesses. So, or on the later stage side, are you equally? Are you splitting your time equally between token? Because I know on the earlier stage, Dragonfly does a ton of token deals. Is it similar on a late stage, or are you focused more on equity businesses?
No, we do everything, and we want to make sure that we are investing and partnering with the best businesses that are in and serve the space. Whether that's token or equities, right? And that's both at the early stage and any stage thereafter.
But at the later stage side on token businesses, many times the tokens have already done a sale. So is this more like buying liquid assets at a later stage and holding them? Is that buying equity in token businesses, or are these, or the token? Like I know sometimes tokens will sell tokens out of their own treasury and stuff like that. But like if you were going to define something as like, let's just say theoretically, I wanted a later stage investment in insert large layer one. Like what does that actually look like?
Yeah, so we have done, and Dragonfly has done, kind of these negotiated treasury sales as you talked about, right? I think we've done investments into things like Lido publicly and others that are kind of locked up treasury deals, and so we do those. Yeah. We also have a kind of a long short hedge fund, as I talked about. Typically, if we were to do it in kind of the closed end fund, it would be kind of more of a locked up treasury negotiated situation like you talked about. But in those cases, again, we approach it with a similar kind of data-driven mindset, and we approach it with, what do we think the fundamental value of this type of token can be, what sort of value accrues, and what is the data telling us, whether it's like developer data or unique users or unique wallets, and where do we think the technology will land in the future. When we come and approach those investments. So I don't think it's particularly, it might be different, the types of data we use and the way that we think about deciding on or valuing protocol like that, but it's not different in terms of how we think about kind of the rigorous data-driven approach that we take.
And so how do you go about sourcing deal flow at a later stage, right? Obviously on the earlier stage, it's an art, I think, in terms of coming up with deal flow. From a later stage perspective, do you think you have a good grasp on like all of the companies out there within the space that are ready for a Series B or C or later? Or do you think that there are still a lot of companies that are kind of, is it hard to stay on top of all the firms in the space?
Yeah, I think so. First and foremost, Dragonfly more broadly sees the vast majority of the deal flow within crypto, right? And so, our pipeline coming from pre-seed to seed to Series A to Series B, we're able to track and understand and get close to those businesses throughout that entire time, and so that makes it really easy for us to understand who's gaining traction, who's winning in certain verticals, et cetera, right? I think there's no way that I know every single good business in crypto that's at the Series A+ level or Series B level, but I do think it is through that pipeline, through the relationships we have with many of the other VCs in the space, the relationships that we have within our portfolio. Sometimes our portfolio companies will say, "Hey, I'm utilizing this protocol or this business to help me with what I'm building, and they're awesome. You should meet them as well." And so when we, through all of those connections, and just through kind of our own tracking of what we think is most important in the space and what's most prime for growth, I think it is easier to make sure that you are on top of all of the really good businesses and really good protocols, but it's impossible to be on top of everything, right?
And so FTX collapsed, and a lot has happened since then. And so
wait, it did? Wait,
okay. I mean, it did. This little exchange that took many of our assets with them. So that's seriously hampered a lot of companies in crypto. I'm curious, given your seat within Dragonfly, how many businesses or what percent of businesses in crypto would you estimate, this is an estimate, I'm not holding you to, were materially impacted by this news?
Well, and that also depends on the word material.
So materially, like their runway changed by more than 30%.
I would say just
I don't know if that's a good.
Yeah, it's it's all arbitrary. But I would say broadly, people who all of us are feeling pain one way or the other just because of the amount of
this is what I've been telling people is everyone is fucked. It's just a spectrum of how fucked you are.
Yeah, so. No. Listen, this year has broadly fucked a lot of people just because of the way the market's behaved, right? And like if you're a transaction-based business, even if you had no exposure to FTX whatsoever, like your revenue is down 80-90% this year, right? Like so we're all hurting. But in terms of how many people like maybe lost assets on FTX or had loans blow up, etc., my guess is it's 20%, 25%.
It's a lot of companies.
But that could be a high estimate. And I will say it's predicated on the fact that like basically everyone in Solana is affected, right? And so it's very kind of.
Well, and I think also like token projects that held their own tokens on balance sheet are impacted because if FTX hadn't collapsed, like we'd probably be looking at 30K Bitcoin right now, right? Yeah. And tokens would not. But
I think, but the Solana ecosystem obviously is hurt more than others
directly,
because FTX not only did all these investments and then said, hey, put your coins on FTX, and in some cases. The people who invested in those protocols otherwise had, basically had to have an FTX account to be able to get their vested tokens whenever they vested, right? And FTX might be the only place to keep that Solana token, and so you didn't take it off otherwise. And so it was, that ecosystem, the investors in the space, the protocols in that space are so disproportionately hurt. But I think it's still, 20-25% more broadly.
And how does that impact how you view later stage investing in crypto? The collapse. Does it change anything for you? Does it make you more skeptical of certain types of business models? Or like, is there anything material? Obviously, you said any transactional revenue business is down 90%. So theoretically, even if multiples didn't change, the valuations those businesses certainly have. So
yeah, I think what it's actually been for me is, I think, just a stamp of approval on the way that we approach the market, right? Which is we've always been, or at least I've always been, in these kind of later stage businesses, really focused on doing deep diligence and understanding the markets. We're not, competing on who can be the fastest, right? And that's the way we've all heard the stories now about how Sam would call up all the different VCs and say, "Hey, listen, who." You have to be in now, right? If you want to get this type of price, right? It's not the way that we've ever operated. Always been really focused on, what governance structures look like, right? Always been really focused on what, paying valuations that made sense for the business, because at times, right, some of these high valuations that people have raised at isn't just hurting the investors and their ability to get returns, but it's also hurting the protocols or the businesses themselves.
The employees more than
anything.
And the
employees, right, more than anything, exactly. Because they're unable to potentially hire at, the appropriate valuations. And they're unable to maybe, get capital in the future in a way that makes sense. Or they had to take a significant down round, then the employees are getting significantly diluted. They potentially have to issue more options, as you mentioned, right? And so, broadly, this thirst for let me just like compete for the highest price that makes absolutely no sense. It hurts everybody within the entire ecosystem. So we've always taken that approach that we want to be good partners. We want to be good stewards of our LP capital, but we also want to be good partners to our founders and to the employees. And for us to do that, there has to be a coming to the minds of what makes sense for both us and for them.
And so, from a founder perspective, how much do you think multiples have compressed across different stages of crypto investing? Like I'm hearing for the first time, like seed rounds are now being done at like 15 to 20-ish, whereas they were being done in some cases up to 100. I've heard even a couple of deals above 100. In other asset classes, seed deals are done at like 5 to 10. Yeah. So it still seems relatively high, but I'm curious as to, like across the board, across different rounds, like, from a percentage, if a Series B company on average was trading at X, obviously it depends on the type of company, right? A SaaS company is going to trade at different than a transactional company, different than a media company. But broadly speaking, have multiples like compressed 50% across all rounds? Or they compress 70%? Like, how do you think about that?
Yeah, I think it really depends on. So broadly, I think there are three types of companies in the space right now, right, or protocols. One is a business that had raised a ton of money in 2021, has no need for capital whatsoever now, is potentially willing to take kind of a strategic round to pour a little more fuel on the fire and capture market share. Those guys today are saying, hey, listen, like we know we're one of the best companies or the best protocols, and you still need to pay the multiple that we think you need to pay if you want to be a part of our growth story. And a lot of times it's usually, okay, well, flat to last round, so the multiples come down, so the business is maybe doing a little bit better. But it's they're being very selective around what's happening. That one I would say is the minority, but we're seeing at kind of the top level of the pyramid. Beyond that, it's businesses or protocols that potentially didn't raise earlier, whether it was timing, whether it was simply that they didn't need the capital at the time, so they waited. Who do need to go and raise capital now to execute on their plans, and they are being more reasonable about multiples. I would say, at the series, call it B plus C stage, like there's very little people investing in that stage, if at all, and so those multiples are way down, and probably something like 66%, 70%. Seed stage not down as far because there were so many people and so many funds that raised capital that they still want to and need to deploy. That's probably closer to, I don't know, call it 50-ish%. But it hasn't fallen quite as far as the later stage has, but the early stage hasn't fallen quite as far as like public tech multiples, for instance.
And so, we talked about founders, but what about LPs? So obviously you joined Dragonfly recently, so I presume you're not talking as much directly to the LPs quite yet, though I'm sure you've had some conversations. But I'm curious what you've heard from other funds in crypto, but also from Dragonfly in terms of LP appetite for crypto exposure and how that's changed, both among like, hey, are there existing LPs that are like, fuck this, I'm out? Are people are generally becoming more careful because of the macro situation and like, why would I put money in anything when I can earn 5% interest, through treasuries? But I'm curious as to how you think allocators are thinking about crypto exposure, and particularly allocators that already have exposure to crypto. I think is a more interesting gauge.
Yeah, my impression of what's happening with allocators is that there's a lot of fear that's entered the market, simply because whether a lot of them did direct investments and LP investments, and the direct investments they maybe got burned on, like for instance FTX, we've seen a lot of that, and maybe some of the funds that they're in are way down, whereas in some others aren't, right? So there are other funds out there, Dragonfly for instance, that were relatively unaffected. And so, even though there is this fear, the conversation and seems to be that we still believe in the long-term thesis. Yep. And we still, believe in having, that exposure and being, backing those companies and those funds in that space. But there is, I think, a little bit of a retrenching around, how do we think about, the companies, the protocols, the funds that we back? How do we think about doing diligence, and do we need to be more thoughtful around some of those aspects before we actually put money in? But not that we want to not put money in, right? And I would tell you, for instance, there is something that we're uninvolved with, but I know for instance there are still endowments and pensions who are doing things direct right now, and it's not just one or two. There are a few that are still doing that. So the
direct investments in this, like
direct investments into the space
from an equity perspective or a token perspective.
It's primarily equity investments for those types of allocators. But what I would say is there is more concern, but they do see the long term vision here. and the reality is, I think in that space is these allocators, they've been killed by everything this year, right? We talk a lot about like what's happened in crypto, but there's large private equity exposure, there's large venture capital exposure, there's large public market exposure, and especially tech stocks, right? Real estate exposure in a lot of these places, and the whole portfolio is bloody red this year, right? And it's not crypto specific. And when you take it with that mindset, you understand that a lot of this year is a macro driven story as much as it is kind of idiosyncratic to what's happening in crypto.
And so you actually alluded to this earlier, which is fundamental value, which is the name of the podcast. So one question that
I had to throw that in there.
What'd you say?
I said I had to throw that in.
Yeah,
there.
I appreciate it. So we ask all our guests about fundamentals for tokens, and so how do you define fundamentals for digital assets? I think you already talked about a couple of things. I think developer activity and active addresses on chain, I think, might have been the two things that you talked about, or another on chain metric. And so, how do you think about fundamentals? How do you define them, and does it depend on the token?
It certainly depends on the token and the protocol, right? And we try to look at everything not through just kind of one stringent lens, because that's a way to make, I think, a bad decision. But it does. I think one of the core things that we always come back to is where do the smartest kids at Stanford and Cal and MIT want to work? What do they want to work on? And what is the activity based on those kids and based on people coming into the space? That's kind of a core way that we look at these things. But then I think more broadly, there are ways to put some Wall Street style analytics or data and analytics around the way we think about these different protocols. But you have to be thoughtful around some of the smoke and mirrors, which things like TVL can be, right? And so it's data driven, it's usage driven, it's developer driven, and we try to make sure that we aren't stringent on any one data point, but that we are triangulating with that value and what we think it could be.
So it sounds like it's a quantitative assessment, but a subjective decision in a way, right? Where there's kind of like things that you're always kind of looking for, but at the end of the day, it's bringing all those things together, and then as an investment committee or a team, basically make a decision on.
Yeah, I think that sounds right.
Yeah, makes sense. And so, shit's hit the fan. Shit can hit the fan more, right? The shit can be never ending. Crypto is taking a huge hit, right? A lot of tokens are down 90%. Companies are blowing up left and right. So let's ignore when the bottom is. The bottom could be in 6 months. It could be in a year. It could be now. But what does the recovery look like? Does the market ever fully recover? And, what sectors of the market do you think will recover, and which ones do you think will not?
Yeah. So, I certainly think the market's going to recover, both for your sake and mine. But
That's why we have drinks here, guys. If you're listening, we're drinking.
No, but I actually think there is a lot to be optimistic about for next year, right? So I'm going to start with like a broader macro story, because I try to always approach things from like 1,000-foot view and bring it down. But the investors more broadly are the bearish that they've been about risk on asset classes since the depths of the financial crisis. And if you look around what is happening in the data, if you look around what's happening in kind of core PC coming down and inflation coming down on most of goods and services, inflation coming down on the supply chain shocks are starting to work. Have worked in many ways, worked most of their way through the economy. The labor market, depending on if you think good news is bad, is still continuing to look quite strong. While debt is at a nominal high for retail debt as a percentage of income, because of how high we've had nominal wage growth, is actually still not that high. And so you look around to all of these things that are happening, and you say, why are people so bearish on what will be, I guess, lower EPS next year because of the rising interest rates, when the data doesn't show that the economy is actually doing that badly. And I think what it does tell us is that if things aren't as bad as everyone thinks they are going to be, and I think the reality of the financial markets is that people on a sentiment basis get way too high in bull runs and way too low in bearish times. I think when you look at that, it says once people start to realize if it is true that it's not actually that bad, we're going to see a really quick snap back to risk on assets, right?
So you're talking a lot about macro.
Yep.
But is there anything in crypto which is actually valuable? Yes, macro obviously has to be good for people to put their money in crypto. But
it's been a macro story this year in a lot of ways.
No, 100%.
Right? I think that macro story has affected the way a lot of at least traders and liquid investors have approached the space. But when you so level set it with that, and then say, okay, well, look at what all of the Fortune 500s who are investing in the space, the large brands who are investing in the space. You talk to them, and none of them are stopping. There's I guess a few cases where like the ASX, the Australian exchange, decided to shut down their program, and I think that was kind of happened before FTX. But in most cases, you talk to any of these people, and I still know Fortune 500s building on chain, whether they're building their own applications, whether they're building on their layer 2s, whether they're building their own subnets, etc. I still know.
A shout out to Avalanche there, guys.
I still know, like KKR still doing one of their funds on one of the Avalanche subnets, right? You talk to all of these people, and a lot of the brands are still, ferociously attacking on-chain gaming and how to utilize NFTs as a marketing. As a way to do marketing or as a way to increase loyalty, right? And you still see the payments providers thinking about how they're going to do remittances and cross-border payments within the space, and all of them are still very bearish. I mean, Visa or bullish, sorry, not bearish. Visa came out with a note yesterday about how they're doing. I believe it was like a autonomous automatic payments.
Recurring,
recurring payments, exactly. Using Starkware, right? So none of these guys have said, hey, I want to leave the space. And so there's clear that the building and the innovation is continuing to happen. The people that are actually the most scared are actually the capital allocators. But the builders, the engineers, and the entrepreneurs, they're all still here.
And so fast forward 2 years from now, it sounds like you think the market's recovered. But how many of the top 100 cryptocurrencies by market cap will still be there?
Oh, who knows? I think it's top 100. It will still be in the top 100. 30%, 40%, right? Some of these things like have a way never to die.
It's quite impressive how many tokens have managed not to die.
Yeah.
Like this Telegram open network thing, this new Telegram thing. Tom is like back in the top 20 by top 30 by market cap. So yeah. No, not commenting on. I don't know anything about it, but
it's not investment advice.
Yes.
Yeah.
No investment advice in one way or another on that. But yeah, it's really impressive how many tokens have managed not to die. Like Ethereum Classic was like 51% attacked a bunch of times. I don't really know anybody who's building anything off of Ethereum Classic. And
it's just the miners, right? Like
I guess the miners are propping it up because now they're interested in it. But yeah, I think that's an interesting. I think it's an interesting take. I mean, I think for perspective. We've looked a couple times before on the show. I think about 2 years ago, 60% of the tokens in the top 100 or 70% were still in it. But it was like a huge shuffle out. Like a lot of tokens moved up to the top 30, and a lot of the ones that were like in the top 30 just moved down to like 80 or 90, right? So useful to have that kind of.
I might have undersold it at 30 or 40%.
Yeah,
I'll be honest. I have no idea what's 50 or 70 or.
It's a token you've never heard of before.
Yeah, and I try not to look at like prices on a daily. It doesn't affect me how I do my job.
And so, what is your hottest take right now? I know you didn't have a hottest take when you got here. So, have you developed one?
No, I think I don't know if I have a hottest take, but I will say what I truly believe that there will be a kind of reimagining of how we bring value to users. And I wouldn't be in the space if it wasn't. And I do expect that there will be some of the kind of they could never fail Web 2 or traditional businesses will get basically completely subsumed by crypto and will become essentially crypto companies in the future that nobody expects.
And actually, an interesting question on that point is, with the collapse of FTX, we've seen a lot of distrust in crypto businesses and a lot of distrust in centralized exchanges and custodying your own assets and this and that. For the longest time, I think I felt like every crypto company is going to win, right? Like, crypto is going to win custody, crypto is going to win this, crypto is going to win that. I'm personally starting to change and be like, well, if I had $100 million and I wanted to custody my Bitcoin, I'd probably go to BNY Mellon because they have like 20 trillion other assets they're custodying and they have this massive balance sheet. And if they lost my $100 million, I'm fairly confident they'd make me whole. So I think that there has been for this long period of time, like this belief that crypto companies are going to disrupt traditional capital markets. And it feels like this window has just opened up, like Cowen coming into crypto. We did an episode with them, which was awesome. And, rolling out prime brokerage, cap intro, custody, all these, solutions. Do you think this actually becomes a battle with more traditional capital markets participants in certain sectors of the market? I mean, do you think there's sectors where crypto native companies have a bigger edge than their capital markets counterparts?
I think there are absolutely places where crypto native companies have an edge, and I will say, in some cases, for instance, my vision of the future is that when people trade crypto, there will be access both centralized order books and also DeFi, right? I expect that the way in which people will approach their trading activities, approach their yield farming activities, et cetera, will include portals into both, and that those will be aggregated, right? And what we have found is, at least in the times that I've spent and the people I've talked to, is that DeFi is actually still really hard for institutions to get comfortable with, to have the right, whether the right PMS, OMS, to have the right accounting, to have the right, execution and settlement that fits the way that they look at the space. And so crypto native companies have actually are making much more progress on solving that than maybe the non-crypto native.
I agree. I don't think there's not really any non-crypto companies that are really focused on DeFi at this point.
Yeah, no, and I agree. And so this also includes kind of everything that would surround that, right? Mm-hmm. So whether it is, the regulatory or the RegTech businesses, et cetera, right? So I think that and if you believe in DeFi, which I think, following FTX, I believe in it more strongly than ever, then you believe that there is a space in which these kind of crypto native companies are going to provide a lot of value, maybe alongside of and complement some of the more kind of centralized, TradFi institutions.
What do you think of this idea of like CDFi, like this kind of, merger of the two? And
I don't really know what that means.
I don't really know what that means other than like my team is doing a tremendous amount of on-chain data, as you know.
Yeah.
And I was like to my team, hey guys, can we pull some data on DYDX users and usage and stuff like that from the chain? And they're like, well, all the data is in their API, which is off-chain. There's no on-chain data around DYDX. So I think it's
they're going to eventually come on-chain, right? So,
yeah, we'll see. We'll see. But I think there are some like DeFi projects that kind of sit in the middle where like they have their own APIs, they have firewalls. Like even though the transaction might settle on-chain, the rest of what is going on is happening kind of off-chain.
Yeah, listen, I think that is a part of what will continue to exist for at least for a period of time. I think, I don't know specifically what the DY.
No, that was I haven't looked at it yet.
But my expectation is that everyone is continuing to work to put more and more on chain. Right. And it's not easy, right? And so people are working through, in some cases, having a centralized entity that then decentralizes over time. That does more and more on chain over time, right? As there continues to be a lot of innovation in the space. So I don't know what CDFi really means.
Yeah.
But what I will say is that
we love shitty acronyms in this space. Like this DSOC, decentralized social thing. There's like I saw like 17 different things on Twitter this week. All the people like crowning there, and people like want to come up with the acronym.
Yeah, well, it
is the worst way for us to ever onboard a traditional financial institution to crypto. Like the worst thing we could possibly do is come up with more of these dumb acronyms that meant absolutely nothing.
I tell you what, when I first saw DSOC, I was like, is this some new like government entity? It sounded like some sort of like, like spy organization or something. And then people were like, oh, Elon decided to ban like, every single other mention of a social media site. So now we're going to have DSOC. And I was like, well, I don't know if that's true, but what I do know is that Twitter just kind of sucks relative to what it used to be if we continue just to ban everything. And so there are, needs for other types of social, platforms. And I think we will, I think the reality is that decentralized identity is going to be a big part of the way we do social media in the future. I don't know if the social media sites themselves will be decentralized, but I think there's a good possibility they are.
I mean, how many assets do you think are actually practically decentralized and not just have their vote controlled by like Andreessen?
That's a different conversation versus just broadly decentralization, and I'm not sure that I can really speculate. So
fair enough. And so that was great, Rob. I'm throwing more questions. My paper's already ripped up. We're done here. Thank you for coming on. That was great. I just throwing some questions on you at the end. Where can people find out more about you and Dragonfly, and where can people send you their awesome decks and their awesome deals?
So Dragonfly.xyz is our website. I'm on Twitter. It's at Hadick M. So it's my last name, Hadick M as in Matthew. And then, people can, send, any of their decks through, it's info@dragonfly.xyz.
Awesome.
And then you engage with us on any of our social media platforms, including Twitter.
Awesome. Amazing. And on DSOC. Thank you, Rob. That was great.
Thanks.